Hi, and welcome to the Stock Scores Market Minutes for January 29th, 2018. This week, let's talk about the morning Stairmaster. If you're a trader, you will know that many of the stocks out there are making most of their move in the opening hour and then going sideways into the close. It's this step up day after day for the swing trader that makes money, but for the day trader, if you're not in really early, it's hard to get much profit because most of the move is sideways for most of the day. The few stocks that do trend higher all day are really the high profile, tend to be large cap names that get accumulated by institutions. It can be smaller cap too, but most of them that I'm seeing are large cap names that will start the move in the morning and just keep right on going. And they show a lot of volume and a lot of abnormal volume as a clue that they're going to do that. You want to get in early and ride these few stocks and catch the human buying interest, not the computers, for that good trade that happens all day long. Let's get into this week's market analysis. Here is a chart of the S&P 500 30-day 60-minute chart. And you can see, we've talked about this before, but we are in an upward trend. We are in an upward channel. We're getting close to the top of the channel. So perhaps another up day before we hit the top and then pull back on a little bit of profit taking. We've seen that a number of times. I would expect that to happen again this week. Looking at the longer term weekly chart, you can really see how this trend is going parabolic. And of course, parabolic trends eventually correct back to the trend line. And as I draw lines on here, you just see that parabolic nature of the market. There is no sign of profit taking here yet, but it stands to reason that when trends go parabolic, eventually the bubble bursts and you do get a pullback. I would stay long, but dance close to the exit door because eventually there will be some profit taking. Moving along to the Russell small cap sector, of course, they have been lagging the large caps and really aren't in that parabolic trend. They are trending higher from left to right, but they're not really capturing the real buyer enthusiasm like the larger cap sectors are. And perhaps if there is some profit taking in the large caps, we'll see some accumulation in those small cap stocks. Canadian market in the short term, you can see some pessimism building. We also broke through some support this week. We're now down approaching this support zone, but certainly the Canadian market underperforming the US market. Looking at the longer term chart, you can see that underperformance as well because we just don't have that parabolic trend that we see in the US market not existing in the Canadian market. So the Canadian market less risky, but also Canadian investors not enjoying the same enthusiasm that the US market is. TSX Venture has had some great enthusiasm, primarily from cannabis stocks, which really rallied there. We're now seeing a little bit of a drift. The upward trend line here maybe hasn't been broken yet, but the short-term one has. And I think we could see a little bit more weakness, bringing it back to that upward trend line before we get our first chance at a bounce. 20-year treasuries, which of course helps us to understand where interest rates are going to go. We've got a little bit of a head and shoulders pattern building, but until we get a breakdown through the neckline, wouldn't be too concerned. If we do get that breakdown through the neckline, we're going to see support in around that 118, 117 mark on the TLT. And that would mean that interest rates will climb a little bit when that happens. US dollar, a big concern for some economies because, of course, if you're selling into the US market, then a weaker US dollar doesn't help you. Of course, if you have to buy things like gold and oil, it is a good thing, and that's why the prices of gold and oil have done well. The US dollar had some support here. We talked about that last week. It totally failed on the hold of that and has broken through it. So we now would expect that this is continuing to be a weak market, and I would not want to jump in front of the bear on the US dollar. It is oversold because you can see the distance from the trend line down to where price is quite far, but an oversold market can be oversold for a long time. So don't try to anticipate a bounce in the US dollar until you see at least a break in some of the shorter term chart, perhaps the daily or even the 60-minute chart is something that I would watch. And as I said, that has helped gold rally higher again this week, but now it's getting up into that horizontal resistance zone. We drew the angled trend line. It's broken that angled trend line, but now the question is, will it break through to the highs from January of last year? Well, not last year, 2 years ago. Not January. The middle of the year in 2016. That's what I'm trying to say. We are bumping up against that. It's always difficult to break through those long-term resistance zones, but if there's continued weakness in the US dollar, I do expect that to happen. If the US dollar bounces, I think the gold market will move lower, finding support at the upward trend line, which is right around there. And finally, the oil chart, which also benefits from weakness in the US dollar, is on a nice rally. It's not going to let me do it. Trying to draw the resistance line. Let's call it $12 on the UUP. That is resistance on the oil chart. If you look at the daily chart of oil, it looks pretty exuberant. The market's been moving up sharply. When you look at this longer term chart, you realize that there's still a long way for oil to climb before it's back to where it was in the real bull market days for oil. I think that this continues to move higher, but I do think given that exuberance on the weekly chart, we could see it pull back in the short term. And finally, the fear chart, which is the VIX, the VXX is the ETF, ETN, and it is actually starting to build some optimism. We can see the, it's not going to let me draw in here. I'll just do it this way. Microsoft wants to mess with me, I'll fight back. So here's my pen tool. You can see the rising bottoms that are building here and in toward that resistance zone. That is the build of an ascending triangle pattern. And if we get a breakout through that, that may telegraph something of a correction in the US stock market. So keep an eye on this chart, the VXX. This is a 30-day, 120-minute chart. You can use an hourly as well. But watch for that real strong breakout through 28. If that happens, I would place some defense on your stock portfolio. All right, so my ratings then: bullish on US stocks, bullish on the Canadian market long-term, but neutral short-term. We are seeing some weakness short-term. Gold, neutral long-term because we are at that resistance level, but bullish short-term. Short-term because the price is moving up over the last month or so. Oil, bullish on both time frames. U.S. stock trends are becoming increasingly parabolic, making them risky, but also very profitable to trade. It's a good time to be trading these stocks. Just realize you got to dance close to the exit door. Canadian stocks are lagging despite the strength in oil and gold. Gold is stalling at resistance. US dollar is oversold, and if it does bounce, it'll bring some profit taking in gold, perhaps in oil. Fear is slowly building an optimistic chart. All right, let's take a look at the day trade of the week, which is one that I did on Friday. And this really drives home where I'm seeing the best day trades. It's these big name, large cap stocks. They announce earnings or have some kind of good news, and we see them actually rise all day long. So I bought Pfizer on the open after the opening 2-minute candle. Had a nice trade on it. It maxed out at just a little over 8 RR for the day. But it's one of the few stocks that rallied through the day instead of just doing this opening market rally, opening hour rally, and then going sideways all day. And the ones that I'm seeing that are doing that are mostly the large cap stocks. I can think of Halliburton, Nike last week. They all were the ones that did that. So I think that's a good place to play. These stocks are more capital intensive. You got to buy more of it to take the same amount of risk. So not everyone likes that, but keep an eye on those next week as earnings season continues. Well, that has been the Stock Scores Market Minutes. Subscribe to the channel, like the video if you liked it, and if you have any comments, leave those and I'll try to answer them that way. Have a great week in the market and trade well.